Now more than ever, innovative technologies are fueling change and sparking new ways of thinking. Collaboration between corporations and startups is key to staying at the forefront of these trends. However, finding the right startups can be expensive, time-consuming, and ineffective. But Plug and Play is here to help. As a corporate partner, you will gain access to a whole ecosystem of innovation. Discover startups that meet your tech interests. Stay updated on the latest trends and network with industry peers. We will help you during every stage of your innovation journey, no matter where you are and where you want to go. Get in touch today.
Okay, so welcome to the second Plug and Play Brazil VC Summit, guys. We'll have in the screen the agenda here of today. We're going to go over a little bit of Plug and Play and an overview of our office here in Brazil. Then we have the International VCs panel, the Brazilian VC perspective. Then we're going to have a couple of startups here from our portfolio and from Brazil. Then we're going to have the networking session in Remo. The session here today will be mediated by the Brazilian Ventures team, which is me. Hi, everyone. I'm the Ventures analyst for the food and ag tech vertical here in Brazil. Rafa.
Hey, everyone. Hey, Luigi. Thanks for the introduction. So, as Luigi mentioned, we're here with our Brazilian Ventures team. I'm Rafael Fialho. I'm focusing the financial service here in Brazil. I joined Plug and Play actually at the end of last year, so I had the opportunity to join our first VC Summit event. So now it's the second honor to be part of this event. Perfect, guys. So to give a quick off on this event, so the first part, we're going to talk a little bit about Plug and Play. So I think most of you guys already know Plug and Play. So basically, we work in two different arms. So the first one, let's talk a little bit about the VC arm that we work. So we are a early stage seed and Series A venture capital firm. We co-invest with a lot of international and global and LATAM venture capital firms as well. Last year we had an average of 200 investments globally saying. Our average check is $110K. And another part, on another arm, let's say, we are as well a global innovation platform where we have more than 500 corporate partners that we connect with all the startups that are in our ecosystem. So our big platform, we have just our headquarters in Silicon Valley and different places around the world. So in our office here in Brazil, we launched it in 2019. And since then, we did a lot of stuff, let's say, here in Brazil. So in our ecosystem, we have more than 40K startups. We have some of them here in this event. So thanks for the startups that are here. And to make all this process and operation happen, we have more than 100 ventures associates here. We cover almost all the industries in our operations. So last year, we were considered the top 3 most active venture capital firms globally in the early stage in angel and seed, and we were the venture capital firm with the most exit around the globe as well. There's some highlights. As I mentioned, we have more than 500 corporates, big corporates. So we have some McDonald's, Procter & Gamble, Shell as well, Red Bull.
I think we lost Rafa, maybe some technical issues, but yeah, this is our corporate reach out. This is the size of our network. We have more than 500, as Rafa mentioned. This is just a picture of some of them. And this is a little bit of our unicorns. We have invested in more than 1,000 startups, and we have more than 20 unicorns already, a bit higher than Brazil still, but we're going to get that to the break even. Our international VCs, this is a couple of our VCs that are partners of ours in the US. We have a couple of them here as well today. Rafa, you're back. That's good. I'm just gonna jump into the Brazilian timeline, the Brazilian office here. We had a partnership with Grupo Abril from 2015 to 2016, where we did 6 investments and accelerated a couple of startups as well. From 2016 until 2019, we had another partnership with Porto Seguro, Oxigênio Aceleradora, and Liga Ventures, and we kind of increased our exposure here, more investments and more acceleration going on. And then we landed our office in September 2019 with a dedicated ventures team and a dedicated PSM team as well for the corporate side. And this is a little bit of our results. So we had 7 acceleration programs, 3 on the food and ag tech side, 2 on the fintech side, 1 with Tetra Pak and 1 with Facebook, where we accelerated 88 startups from all these programs. We also invested in 49 startups as well. Out of these 137 combined in Brazilian plug and play ecosystem, 43 of them are here today with us for the second panel, and more than 30 are fundraising. So it's a nice opportunity, and as Rafa mentioned, all industry covered. We're going to start our international VC panel. Rafa, please.
Thanks, Luigi. I had a little bit problem with connection, so happy to be back here. So to start our first panel here in this event, I will ask Sebastian, Philip, and Henio to turn on your cameras to welcome you guys here for this panel. Perfect. I think Philip is just missing Philip. But guys, first of all, I want to really thank you for your time here. I know your time is really valuable, but we are really happy to have you guys here. So I want to give you a little bit like time just to you guys to introduce yourselves so we can start. Sebastian, if you want to go first.
Sure. Hey all, thanks for inviting me to join the panel here. I'm Sebastian, I'm a principal at AVC, and we are a mainly US focused, at least right now, Series A, Series B firm based out of San Francisco. I'm at our office in San Francisco right now. We were started by Joe Lonsdale, who's one of the co-founders of Palantir. My own background is I was at Palantir for 4.5, 5 years before joining AVC about 2.5 years ago. And, I think for us, we are preparing to do a lot more in Brazil and Latin America. And I guess for context, we're investing in a couple of verticals. We're investing in fintech, we're investing in insurance, we're investing in supply chain logistics, we're investing in healthcare. My own personal focus is mainly in healthcare. And about 2 years ago, I think we begin to realize that there are a lot of lessons in particular sectors of the economy that we can draw upon with our US investing experience and bring to Latin America. They're actually valuable to companies in Brazil and in Latin America more broadly. And so we started making some small investments in companies that looked like companies that we had invested in the United States. So 2 off the top of my head, Audi is sort of like in a firm like business in Colombia. Hobby is sort of like Open Door in Colombia. Those were good experiences for us. It helped us understand sort of the Latin American VC ecosystem a little bit more, helped us understand where we can add value. I think most of our investment team has some kind of an operating background. Like we like to, get in the weeds and be hands-on with founders. It showed us, what value we could bring to these sorts of businesses in Latin America. I think whet our appetite to do more. So these were smaller checks for us, but when we think about the year or two, the years ahead, we want to double down on this thesis and find more opportunities where, hey, stuff we've done in the United States can be applicable. Our lessons from the US can be applicable to what folks are building in Latin America. And we can talk more about specific verticals, but broadly, it's a really exciting time for us. We just raised a $1.5 billion fund, and we think up to 10% of that will be going into Latin American businesses.
Amazing. Thanks, Sebastian. Eugenio, if you want to introduce yourself, please.
Yeah, absolutely. Thanks, Rafael, and hi, Sebastian. Very excited to be on this panel. While we're waiting for Philip to surface, I guess. We lost him on the way here. So my name is Eugenio. I'm a principal within Plug and Play Ventures. I oversee the InsurTech, FinTech, enterprise, and health teams. So it's basically 19 people across 7 different locations, deploying checks on early stage startups. I'm originally from Chile, which I think it's pretty, I guess, unique in the VC ecosystem. You don't get to see a lot of Latinx folks in this field, especially when more and more of the US and Europe investors are coming into Latin America. So I'm really excited to be here. I don't mean to bore everyone. I think Rafael and the rest of the team basically did a great overview of Plug and Play, but we're one of the most, I guess, active investors at the early stage. We're deploying capital all across the globe, and Latin America has been for a long time one of our core areas. And as Sebastian mentioned, there's a ton of things to be doing here, so I'm really excited to be here.
Perfect, thanks, Eugenio. And Philip, really nice to have you. I will pass you the word so you can introduce yourself, tell a bit more about Valor Capital as well.
Thanks, Rafael and team, for having me. Philip Trower here. I'm a principal at Valor. I've been with Valor for about 4 years, total 5 years in venture. I'm originally from Rio de Janeiro. Been deploying capital with Valor here in the ecosystem since 2017 when I opened up the Brazil office in São Paulo. We are a New York-based, New York headquartered fund that has been active here in the region, particularly in Brazil since 2012. We have a portfolio currently of about 60 Brazilian portfolio companies, another 5 in rest of Latin America, particularly in Argentina and Mexico. And we also deploy capital towards global opportunities with an emphasis in the US. We have about 20 companies in our global mandate. We are a $1.5 billion AUM firm. We're generalists, so with more concentrations in fintech, logistics, health, education, and more recently we've been particularly keen on investing in crypto and blockchain. Me in particular, I cover the sectors of the built world, logistics, mobility, ag sector, and now I've been covering some SaaS companies as well in our portfolio. We're extremely excited about the opportunity in Brazil and Latam more broadly. We're doubling down. We're raising new funds. We typically in Brazil will deploy. In Latam in general will come in at the earlier stages, so seed, Series A being the core, but we'll opportunistically invest in Series B plus opportunities. We recently launched a growth fund, so that's fully dedicated to not only our continuity of capital to our portfolio companies, but as well broader Series B plus opportunities in the market. We have about 50% of our mandate is to invest outside of our portfolio of that fund, and we're launching new funds for the earlier stages for dedicated to LATAM as well. So happy to talk more about the pieces and more specifically or anything along those lines.
Perfect, thanks, Philip. So again, guys, thank you for being part of this moment. So I will start the first question, Philip, with you. So we are seeing a lot of different VCs and different investors coming to Brazil. We see SoftBank, you guys with interest here in Latam and Brazil and different countries. We saw Buffett as well with a big investment in Nubank. What do you think is more interesting for you guys here in Brazil, Latam, in this scenario and this market?
Sure. So yeah, a little bit of history. Like I said, although we are US-based investor, we've been active in the region since 2012. So we have seen this ecosystem evolve in many ways, right? Back then, obviously, starting with funding, Brazil absorbed only about $100 million, only 80 or so deals at the time. So there is really, a limited pipeline of opportunities in market. There was a lack of talent, I should say, eager to work in tech, to entrepreneurs eager to take risks and build businesses, and as a result, there is clearly a shortage of capital for venture financing in the market. So fast forward to 10 years to today, we are seeing a completely different atmosphere. First, there's available. The quality of the founding teams have increased considerably. We're seeing second-time founders. We're seeing MBA repatriation. We're starting to see the founder mafias, deriving from large tech companies like Stone, 99, etc. So this is all very positive for a maturing ecosystem, and I think that this is one of the key pieces for every international investor looking to deploy capital in the region, right? Robust talent. So second, on the capital front, I think everyone would agree that LATAM has reached escape velocity here. Just this year alone, I think Brazil received over $5 billion in funding. That's almost twice as much as the entirety of 2020. And we're starting to see, obviously, we used to have a gap in the market for Series B plus investors, and now we have several growth and crossover funds entering the market. The Q2s, the D1s, Tiger has been extremely active. So abundance of capital is another key element of the ecosystem, and we think that this flywheel is in motion right now. And the other thing is obviously exits and unicorns being born. We only got to see our first unicorn being born in 2018, and now we're close to 20 or more in the region, and several more to come. I believe Brazil and LATAM can easily reach 100 plus unicorns a decade from now. So this is we're just at that tipping point of wealth creation in our history, and I think it's super exciting times. And then obviously when you put the sheer size of the economy and the population in perspective, you're talking about a 600 million population, $6 trillion of GDP. That's the population is twice the size of the US. The GDP is 2x the size of India. So it's just a compelling, incredibly large opportunity for investors of all types, from the early stages to the later stages like the ones you mentioned.
Amazing. Thanks, Philip. Eugenio, do you have any other thoughts on what Philip just shared with us?
I think I couldn't agree more with Philip. I think that was probably one of the best answers. And obviously it's different because Philip knows the ecosystem has been here for a long, long time. We've obviously seen that evolution and their growth. I don't quite agree. I think that there's always been talent. I think that there's now a little bit more appetite to become an entrepreneur and to be a little bit more, to take on more bets and take on more risk instead of just going to a good business school and then going back to work at a large company. But I agree, it's evident to everyone here that there's a ton of capital coming into this space. What we have yet to see, I think, is exits. It's easy to raise money, and especially in the market right now when there's so much money. But what we haven't seen so far is exits, and returning that capital is going to be hopefully not an issue in the future, but certainly something that we have yet to see. But yeah, I think what Philip was spot on in his answer.
Perfect. Yeah, totally agree. I think LATAM and Brazil, and not just Brazil, Colombia, Mexico, I think it's really exciting what we are experiencing right now, and really excited for the next years as well. So Sebastian, yeah, yesterday we had a really amazing chat with Luigi as well, and we were talking about 8VC, that you guys already has some, let's say, some investments already in Colombia, and you want to explore another markets as Brazil, Mexico, and many others. And you said about your new fund that you just raised, and you want to deploy 10% of this capital. But in your perspective, what do you think is the biggest challenge for international VCs to invest in Brazil, for example, in any market in Latin in general?
So I think Eugenio hit on one of the key points, which is although we're seeing a lot of success stories, at least from a fundraising perspective, the exit question is still looming large, and still I think a trepidation that many of us are thinking through. With that said, I think there are, as I was alluding to in sort of my opening salvo, there are sectors of the economy in Brazil, in Colombia, and Mexico that look a lot like the United States. And I think we're gaining confidence that there are specific sectors of the economy where what's worked in the US can probably work in LATAM. And I think that, just seeing more and more companies develop traction from a business perspective is helpful, even if that exit question remains unanswered. I think that there's another element where when we invest, obviously we're assessing the business, but we're also assessing the founders. And truthfully, it's harder to develop a relationship over Zoom. It's harder to develop a relationship of trust where there's a language barrier. We do have at least one member of the team who's from Argentina. That's helpful to have Francisco around to get to know these founders better. Nonetheless, I think that it just takes more time to develop that relationship of trust with a founder. And so I think from our perspective, how do you maybe short circuit that? We've been looking to develop more relationships with LATAM-based VCs and partner closely with them, just because we realize it's we're gonna meet a founder, we're gonna get to know them. There may be things we miss. It's gonna take time to develop that relationship of trust. And so can we proxy through LATAM-based VC firms that we get to know well is another thing that we're thinking about. To summarize, it's barriers, it's exits, and developing relationships of trust with founders are two things I'd highlight.
Perfect. Thanks, Sebastian. Totally agree with you. So I think this is a so interesting topic. So I will like Philip or Henio, if you want to complement what just Sebastian just shared with us.
Oh, sure. I think Sebastian is spot on, and it becomes even harder to build a meaningful relationship, especially at the earlier stages when in such a competitive environment. So I think the market, yes, has gotten a lot more competitive. Although we would prefer to be in a less competitive market, we have been supporting international investors to look at Brazil, to look at LATAM, and enter the market for quite some time now, which I believe is extremely positive signaling for the ecosystem as a whole. But more capital available means more early stage deals and more higher quality founding teams, like I talked before. But at the same time, these deals are moving super fast. Some processes need to be better run, and we tell that entrepreneurs all the time. We think Series A is a great place to be because you start developing relationships with founders early on in their journey, seed, pre-seed rounds, and we have constant dialogue with earlier stage investors. But we also need time to run our due diligence, to run our process, to get to know the entrepreneur, which is like Sebastian also said, it's hard to do it over Zoom, right? We need time to understand the market. So it's competition and health moving, and obviously is all having some repercussions on valuations as well, and valuations can be out of whack in some pockets in the economy, but you need, as a VC, you need to balance all of that and at the same time try to be agile, which is obviously a constant challenge that we face. Perfect.
So I have another question here. So since we have some startups here and I have the opportunity to interact with most of them, some of them ask, as Plug and Play, international VC fund, and you guys as well as international VC fund. I want to know more of you guys. What's the biggest value that you guys can bring as international VCs? So we know that some startups, some point they want to internationalize, they want to operate in another country, they want to structure, the legal structure as well. So what the value you guys can bring? So I'm going to open this question open so you guys can jump on that.
Well, I'm happy to go. Valor was born. Our DNA is a cross-border fund. We started out to bridge the U.S. and Brazilian technology ecosystem. So our entire, like I said, DNA modus operandi was built around bridging these two markets. The founding partners of Valor, they used to run large companies like PayPal, Google, NCR across several parts of the world. Antoine, who's our partner in California, he opened up Google's office all across Latin America and several parts of Asia. So, when one of our Brazilian portfolio companies start to look beyond Brazil, not necessarily the US in particular, but start to have global ambitions, we come in and we help these companies apply the internationalization playbooks, that Antoine, Scott, Mario have developed, and we support these companies not only with business development but also navigating legal, regulatory, hiring talent, and we have connections. We're entrenched in the US and Brazil in several ways, so we leverage our connections to help these companies land and expand. So I know it's kind of cliche for VCs to say that they have connections and that's one of their edges, but I truly think we're a highly complementary team. One of our founders was the US ambassador to Brazil and to the Netherlands, so he's very obviously well connected in the regulatory and political sphere. We have partners who ran business development for Google. We have a partner who used to be the CTO for Univision and Viacom. So we're extremely complementary at the top level, and I think that's valuable for companies, and we help institutionalize, build global institutional syndicates, I shall say, and develop robust distribution channels for our companies.
Great. Oh, perfect.
I can go next. So at Plug and Play Ventures, we have a strong belief that what matters at the end of the day is not how much money you raise, but how much dollars you're getting from your customers. And so our whole way to approach this is the opposite of traditional VCs. We have 529 corporate partners across the globe. And so when you're trying to reach someone, figure out, because time is the most valuable resource for entrepreneurs, you don't have the luxury of spending too much time navigating an org chart only to find out that the wrong person has money in their P&L, but not the power to sign that contract and all of that. So we've basically put entrepreneurs in front of everyone that's someone within an industry. We do this across more than 15 different industries. And obviously, we help them shorten the sales cycle and lower their CAC. So if they need distribution, that's where we can help the most. And obviously, because we have offices all across the globe, we can help entrepreneurs launch markets in months instead of years. And that's how we help entrepreneurs achieve either product market fit or scale, which is what we strongly believe is what entrepreneurs need, is the dollars that can enable you to build a sustainable business, not the dollars that you get to parade in front of TechCrunch or any other news article.
Great. Sebastian, do you want to go?
Yeah. I think that Philip and Eugenio have talked a little bit about connectivity and help with BD, among other things, which is certainly something that we'd pride ourselves on, as our network and our ability to make those sorts of connections. I'll take a slightly different angle and also just talk about a different way I think we can add value. And frankly, it ties into how we got interested in LATAM in the first place, which is a personal connection that I made with Tomas Cerutti, the CEO and founder of Dr. Consulta, probably three years ago at this point. And we got into a rhythm of just catching up every 3-4 months and just trading notes on stuff that he's seeing with his business and things that I'm seeing in the US ecosystem. I look a lot at primary care companies here in the US. And so there's a really healthy, just sort of like strategic dialogue happening between Tomas and I. And I think that when I think about how we interact with our existing investments in LATAM and how I think we can add value in the future, it's like we have a really, really strong portfolio in logistics and supply chain companies like Flexport and Deliver. We have a very strong healthcare portfolio, companies like Oscar and Cityblock and Galileo. And I think that, again, I've been emphasizing this throughout this dialogue, this conversation here. There are sectors of the economy in Brazil, Colombia, Mexico, different parts of LATAM that look a lot like their counterparts in the US. And I think that where there are those similarities, there are strategic lessons to be shared. Everyone on our investment team has an operating background. We're in the weeds of the operations in the companies where we invest. And I think it's like that kind of sharing of learnings. Not everything's going to be applicable, but when I think about Dr. Consulta, for instance, there was a lot of valuable conversation around, should we build our own EHR? Should we buy an EHR? What have companies in the US done? How does One Medical think about charging its customers? How does it work with employers? What sorts of things should we be thinking about as Dr. Consulta? And I think that, again, we're early days in Brazil and LATAM more broadly, but I think that this is how we can be most valuable to the different companies that we're looking at in the region.
Amazing. Thanks, guys, for your thoughts on that. I think we have a short time, unfortunately, because we have another content. But we have some Q&A as well, some questions. So thanks everyone for the questions. The one that we can't address right now, we're going to make sure that we can address for the panelists so we can try to get the answers. But Luis Henrique made one question for you guys that says, since we are just right now seeing this late investment gap between several newcomers, do you guys think that this exit gap is right around the corner, something for the next few years? So there's, if someone wants to jump on this question.
I can take a stab at it, and then please, Philip and Sebastian, please chime in. But the main issue that we've seen, obviously, in what the question is referring to is, since there's no exit, it's been historically hard to raise capital, right? There's nothing to return, so there's no funds to be able that you could raise historically. Again, not this year, obviously, because there were no funds, because there was no growth. There wasn't a proper way to set up a company to finally be acquired by someone. I think, and then you get all the way back to the same sort of vicious circle. I think that the influx of capital is definitely changing that. I think Philip alluded to the fact that there's now this second-time entrepreneurs, which is, I would say, arguably the biggest indicator of success for entrepreneurs, whether or not they've been an entrepreneur in the past. So we're starting to see a change, but what really needs to change is the corporate culture of the corporate development arms and whether or not they're acquiring companies. We just saw Notco become a unicorn. It's nice on paper. Nubank, $30 billion in valuation. Those are, I would say, that the outliers and the ones that you probably will see IPO at some point. But the majority of the exits in venture capital are through M&A. And if there's not a ton of activity in that space, if the large companies aren't open to acquire the talent, aren't open to acquire the technology of startups, then we're definitely going to have an issue. I'm seeing more and more that they're open to it, that they're engaging with platforms such as Plug and Play and the like, but it's very healthy to see, or I would love to see a little bit more of them setting up their CVC arms, setting up initiatives around hackathons and engaging with a broader audience to see, for them to start getting in the loop of engaging with startups, that they don't have to like kill their culture when they acquire them. That there's a few things that you can work around there. It's slow, but we're hopeful that that's going to happen more and more.
Yeah, I agree. It is a virtuous cycle. I'm particularly happy to see that we're seeing liquidity events in the stock markets, right? Not only in the Bovespa and the outside of Brazil, 2018, 2019, we start to see those events with Stone, PagSeguro, and a few others that show that large Brazilian tech companies, they can go public in US exchanges or pursue acquisitions by international tech players, like was the case with 99 and Didi. So, and this last year, we're starting to see the local IPOs on the Bovespa, and there's still a very robust pipeline of activity. So that's, but I echo what Eugenio was saying, that the culture here in Brazil for corporates is still slow when you compare to other parts of the world, particularly the US. The kinds of M&A we see here are not in the multi-billion-dollar type exits. It's still in the hundreds of millions of reais. We're seeing obviously certain pockets of the economy, like financial services, has been increasingly active on the M&A front, but we're yet to see health, education, logistics, go that route. E-commerce has been active as another one, but that still needs to happen. And cross-border M&A is still another area that we expect to accelerate over time.
Perfect. So, guys, again, thank you so much for your time. We are going to go forward with the event to the next panel. So I hope you guys, Eugenio, Philip, Sebastian, stay with us. So we have a lot of good content with Luigi right now. And in the end, we will have this networking session so we can continue this discussion, so valuable for everyone. So again, thank you. And Luigi, I'm passing the word to you.
Safa, thanks, Philip, Eugenio, Sebastian. This was an amazing panel. I think we could add another hour to this, and it would be very, very rich, a very rich discussion. But it's now time for our keynote speaker. We have with us here, and it's a pleasure to announce Gabriela Gonçalves, the Managing Director of Brazil Venture Debt. Gabriela, if you can join us in the stage.
Hi, Luigi.
Hi, Gabriela. Sorry for the technical issue there.
No, that's okay. I apologize. We were having, the icon wasn't showing here, but thank you for having me. Very nice panel, very nice event so far.
No, we're the one thanking you, Gabriela. And if you can present yourself and a little bit of Brazil Venture Debt, what you guys are doing here. We all know that you've been involved with the Brazilian VC ecosystem since BNDES Fund Createch 1. So you've seen a lot. You lived this environment a lot. And if you can tell a little bit about Brazil Venture Debt to us and your area of interest, please feel free.
Absolutely. So, as Luigi mentioned, I'm the managing partner at Brazil Venture Debt. We are the first venture debt fund in Brazil. We've been around for the last 2 years, bringing in, which I think has got a lot to do with the theme that we're talking today here, what is part of the, the new evolutions of how the ecosystem in Brazil matures and what kind of, situations we're going to be seeing, challenges. And again, the venture debt coming in as a sign of that maturing ecosystem as a whole. So we've been around for, as I said, 2 years. We've done 8 investments to date. We've got another 2 coming in this week. So we've been reasonably active in the market. And again, trying to help establish this new class of, financial product for the startup industry and for the ecosystem as a whole. As Luigi mentioned, I've been around the ecosystem of Brazil for quite a while. I say, that's basically all I've ever done. I was an intern at Endeavor back in, the 2005 kind of times. And I've seen a little bit how the ecosystem has developed from, again, I think Philip mentioned 2012 having $100 million US worth of investments. And, before that, 2005, we were mapping out the VC funds and PE funds, and we could barely find them at that time. So again, if we see the shift that we had in the last, 15 years, it's huge. The last 10 years, 5 years, we can only see the curve growing. And I think a lot of opportunities coming around.
More, and the signs are there, right? Every time that we see the numbers, it's peaking, it's coming, increasing and increasing. And I think, Gabriela, it's a matter of interest for all of our audience here, how the venture debt alternative to venture capital traditionally is saying, and how does it shape, how does it feel, and what are the benefits from your experience working on both sides? What can you tell us about the venture debt per se, and here in Brazil and the LATAM ecosystem even more?
Absolutely. So I think, again, it's a very new product still in Brazil and LATAM. We heard maybe a few cases in Mexico, but basically outside of that, I would say it's still developing. And again, it makes sense because venture debt, it actually grows into the venture capital ecosystems, right? So it needs to have a strong ecosystem. It needs to have, strong funding so that venture debt can actually, grow and thrive and help leverage the whole system as, as a whole platform, right? So again, Brazil and Mexico are definitely the more mature markets in terms of VC of Latin America, and we're probably going to see the rest of the region following slowly into those shoes. And actually, I think we talked about the gaps that we have in terms of what. And again, venture capital, venture debt comes to actually leverage the venture capital, right? So it doesn't work alone. It won't finance a company from, A to, an exit point, but it will actually help that those investments that the startups and, the founders are raising in terms of equity actually get leveraged with the debt, so that the returns to the investors and to the entrepreneurs themselves are actually much higher, right? So I think in traditional industries, if you talk to the finance areas, there's almost of an obsession, right, with structures of capital and the most efficient cost of capital. And I think what the venture debt brings is actually giving that option, so that different companies can figure out what is that structure that is most efficient to them, and that would actually leverage their returns. So the way that we are bringing the solution to Brazil is, we are finding ways to leverage the startups. Of course, we're having to adapt what the American model is to the reality of Brazil, be that for the maturity of the market, the liquidity of the market, or even for legal reasons of how debt structures work in Brazil, which are very different from the US. And that's another thing that I think differentiates a bit venture capital from venture debt, is that venture debt, as it deals with debts, it tends to be more intrinsic to the legal systems of each country. So it has a few more particularities than, the venture capital, which tends to be more uniform across regions, right? So basically the idea is that we come up with debt structures that fit into a startup pocket, that actually, manage to set up whatever downside protections that we need, but that actually, again, fit in the models of the startups that tend to be very lean, very capital efficient, very, asset light. So that's the whole principle behind it, and what we're trying to set up in Brazil.
And Gabriel, as you mentioned, I think you have more than 80 startups that you already done debt here in Brazil, and being the first venture debt fund in Brazil. I would love to hear, as Philip, Sebastian, and Eugenio were talking just now, the verticals that attract you the most, the Brazil venture debt team, and if there are specific verticals that your guys are looking at. And if you can share with us also a startup case, that would be lovely, and how you saw the growth from the investment, from the debt you made.
Absolutely. I think, as a new product and, trying to grow within the market of venture capital, I think it's still too early, for instance, for us to actually find verticals and be focused on verticals, right? So we are, by definition, generalists right now. We look at every single sectors, and again, trying to see which ones are more mature and which ones, we're figuring out that will have a bigger room to, actually help foster the venture debt industry in the country, right? And we have a portfolio of companies that would go from anything from, SaaS companies to actually a Construtech company. We have companies in the space of food companies, and we're looking at a bit of everything, mobility. So the way that we look at it, the venture debt, what it comes to do is actually help those companies, whether get a few more months in their runway so that they can do, a next round of capital with, a higher valuation, a bit more revenues, or maybe, take on a challenge that they have inside that would actually help them, boost their valuation. Or what the American model would be of actually leveraging the round itself, right? So when a venture capital is coming, most of the times, especially when you go towards the Series B and onwards, you usually have more than one investor coming in, right? And you can bring in more investors for more cash, or you can bring in more venture debt to actually help you leverage that round, get as much money as you need to take you from A to B, but have a smaller dilution, right? I think in terms of the cases that we've seen, I think the most recent, which I'm going to tell here, we had a company I think it's a very interesting case, especially in the pandemic time, right? So we gave a venture debt check in the beginning of 2020 to Goomer. So Goomer is, a startup company basically in the space of food tech, actually bringing in digital menus and, digitalization to restaurants. And they had a very focused business on, the large enterprises, right? So they had the accounts like Madero and KFC and all of these big guys, right? And we gave them the money at that time to, again, scale this up. They had a few pilots going on with a few of these big guys, Subway. And again, all of these big companies that they were rolling out. And of course, the pandemic came in, right? All of the physical restaurants suddenly were shut down, and, the actual delivery, the app in the restaurants and the tablets, the market was coming down. And then again, these guys were very quick in pivoting their business, right? And figuring out that there was an opportunity in the delivery business. And they literally created a new product that was called GoomerGo, right? And I think being a venture debt specialist and, you know, having the venture capital mindset and being in the industry, having been an entrepreneur before, I think we were able to kind of navigate that uncertainty and, you know, that period with Goomer, which I think is maybe a challenge that most credit holders would have of actually understanding the reality of the day-to-day at the startups and, you know, understanding a pivoting moment or, you know, those uncertainties that we know that happen in every single one of the startups. So we kind of grew with them through that process and through the year and through the pandemic challenges of them, you know, creating a new business. We were supporting them from beginning to end. And then just, I mean, maybe 3 months from now, they got a big round with Bridge One at, you know, a valuation that was over 2 times the valuation that they were in before we came in. And again, a company that was, you know, due to suffer highly in the pandemic, but at the same time, you know, managed to show what entrepreneurs do best and, you know, see an opportunity, see what they had in-house in terms of, you know-how and capabilities, and take a whole new opportunity and become a whole new company with, you know, a much larger potential than what they even had before.
I think that the agility that they can pivot their business model is something that it scares us of how fast it is to do these transitions in mid of a pandemic and with smaller resources. But that's the nice thing about this.
That's
and
the DNA. But
yeah,
I think the important part is that, you know, when looking for a venture debt partner, I think that the startups need to have that in mind, that they live in a different world, in an agile world, and they need to find partners that can be agile with them, that can understand their realities, understand their challenges, and actually help them through the process that they're going through.
Yeah, I couldn't agree more. And Gabriel, I think this is a great way to end our panel here, because we're going to introduce our startups. So if you have any other final remarks, please feel free. Or we're going to just move on into the startup panel that are going to talk a little bit about their experience in funding and the differentials from Brazilian VCs, alternative VCs, and also international VCs. So thank you very much.
Thank you for the invitation. Looking forward to hearing the stories.
Thank you very much, Gabriel. Super nice learning from you and all your experience. And now, if we can get Otávio. So for the Brazilian startups panel, guys, we're going to have Rojun, the head of M&A at Truckpad, our portfolio company. Please welcome Rojun. Rojun, if you can just turn your camera on. Lucas, the head of corporate finance at CloudWalk, another portfolio company, fintech here in Brazil. Hi, Lucas. Andrea, the co-founder of Zaga. If you can present also yourself. And finally, Otávio, also the co-founder of Gabriel. Please, if you can all join us in the panel. We're going to quickly just pass you the word. Andrea, please feel free to present yourself.
All right, I'll kick off then. Hi guys, very nice to have all of you around us. Thank you so much for the opportunity to have us on this panel. My name is Andre, I'm one of the co-founders at Zaga. We're focused on solving a few key issues in supply chain and logistics for the healthcare sector, using AI and a few more tools to make sure that this runs smoothly and that we address a key problem in Brazil, which is just access to technology and democratizing the efficiency of scale to smaller companies in the healthcare. So thank you very much for your time.
Perfect. Lucas, if you want to go next to introduce yourself, a little bit about CloudWalk as well.
Yeah, good afternoon, everyone. And it's pretty good to be here with Brazilian entrepreneurs and also fostering the VC industry in our markets. I'm Nepomuceno, and I work with CloudWalk. We are a next generation payments acquiring business. We have novel technologies on the AI front, and we are also delivering the best technology for payments processing for Brazilians, merchants across all states and in over 4,000 cities. And it's really happy to join this panel. Thanks for having me.
Thank you, Lucas. Rojun, if you can present yourself. Rojun is the head of M&A at Truckpad. Please feel free.
Great. Thanks, Luigi. And thanks again, Plug and Play team. Really happy to be here and talk along with some great founders. So I'm the head of M&A at Truckpad, and Truckpad is now the largest digital freight marketplace in Brazil. We connect transportation companies with the independent truck drivers. And now going beyond that, we're working to create a vertical that really helps the payment flow within the logistics ecosystem. And we're trying to create a super app that allows you to not only have access to these matching services, but also risk payment, financial services such as credit insurance, and helping to really digitalize the logistics industry.
And Otavio, last but not least, if you want to introduce about Gabriel, please.
Wonderful. So first of all, thank you everyone from Plug and Play's team. It's a pleasure on our end to be talking to you guys in such a beautiful panel. So first of all, Gabriel, what we are all about, we are creating the largest work in the country. What we do is that we integrate one building to another using our proprietary hardware in order to be able to see every nook and cranny of every street in every city that we operate. Through that, we are rebuilding the very concept of what being safe is all about. So we are solving simultaneously a private and a public problem through technology, mostly Internet of Things and computer vision. So we integrate buildings one another, creating the largest camera network in whatever town we are in. So as of now, we operate only in Rio. So here in Rio alone, we are at this point 4 times bigger than the city government and growing bigger and bigger day after day. So we do that serving buildings, one building at a time. What we do is that we are taking care of the share of wallet of what every resident of every city spends monthly with security. People don't usually know that, but whenever you buy security or whenever you pay for security, you do that through your own homeowners association fees. So in Portuguese, the very own condomínio. So every month you pay for it for access control, for security, and for automation. So whenever you pay for your gate, whenever you pay for your doorman, or whenever you pay for your CCTV or electric fences systems, that alone is the largest part of the chunk of what you pay monthly for your monthly installments in your HOA fees. So we are taking care of all of that, substituting as much as we can for computer vision. So through our own cameras, we are able to substitute and take care of the automation, access control, and everything else that is related to security in any building. So that's what we do.
Thanks, Otario. Actually, thanks everyone for the introduction. So I will start with the first question. So since here we have startups from different sectors, different stages actually, but we have something common here for you guys. You guys were involved in you have this interaction backed from tier 1 VCs, not just like locally, but some of you with globally as well. So what do you guys think it's the most valuable thing a VC can bring as connection, as internationalization? What do you think is the importance to bring a good VC? Actually, as well, I know some of you guys already know each other, as well, the interaction with another startups portfolio as well. So I would to leave this question. So if someone wants to answer,
I can kick off with the answer to that question. I think we in our cap table specifically, we have both international and local VCs backing us. I think it is very clear that both add a lot of value to the equation in their own specific ways. So obviously having local VCs, not only is it much easier for you to get through the country barrier and the acceptance of a risk profile, which is specific to a country, you also have a lot more access to the local players and a lot more a much more productive network of founders, as you said. So we know each other quite well from being part of the same ecosystem. But from an international standpoint, not only do you have a strong seal of approval that what you're doing also resonates with the outside world, of course, it's very important if you're looking for future rounds, but also you get a lot more exposure to a global view of business models and people who have been tried and tested in other geographies, who've endured similar problems with other regulatory landscapes or other competitive landscapes. And of course, bringing this into a country such as Brazil, you get a lot more feel of what worked and what didn't elsewhere, and you can adapt that and localize that. So of course, you get a lot more depth of experience and insights. And with that being said, I mean, a good balance and a good mix of having both those sides of the cap table certainly is a very strong advantage to any company in Brazil.
Love to add on a little bit. I think that's a really great point. One of our sort of investors on our cap table is a joint venture between a strategic player, FTA, and the SoftBank Vision Fund. And really, it ends up being so important that you can benchmark with these different companies with these different business models in different areas. I think this really helps you to understand better, even more, your business model and sort of get a better flavor for why have certain models work better in other countries, and really appreciate how to not only operate better, but also sell better the story that you have. I think understanding this international context ends up being crucial for you to also then try to implement certain best practices. And I think the VCs and the investors internationally do an excellent job of helping you connect globally with these different sort of ecosystems, and that as well as these different startups globally.
Yeah, like following up on that, one thing that we truly noticed since the very beginning is that a good cap table is responsible for fundraising your next round itself. So your cap table is basically the best expression of the ambition of your company, what you're trying to achieve, what are the people behind it, what are the peer companies abroad that you're looking into. So all of those things are purely expressed by who is partnering up with you for building a great company. So I believe that a good blend of players is fundamental for companies that are willing to go really big. So one thing that we noticed here at Gabriel since the very beginning is that if you have a more eccentric thesis, so for example, there are plenty of people doing like dealing with healthcare, dealing with education, dealing with logistics, many other areas that are like plenty of good companies, excellent companies, in fact, in like many of those areas. But what we noticed here at Gabriel is that we were the first ducks swimming in the pond when the subject was security. So that gave us like a good advantage for what we were trying to build, and our like first mover advantage for like talking to local and foreign VCs. But here in Brazil, since the thesis was not common, it was a little bit more complicated. We had a process of teaching people what we're doing and how do we do it and how that market exists and how it behaves and so on and so forth. Because funds didn't have a big number of analysts looking into what we were doing specifically. Abroad, it was much easier since it was an already well-established thesis. So that combination, in fact, like helped us a lot since the very beginning. So yeah, that's my.
Lucas, doing the bridge to you also and changing a little bit the topic on the question. We know CloudWalk has just announced recently its Series B, $190 million, and we would like to understand from the head of finance how's that journey on your end. So how was it dealing with Brazilian VC funds, the international VC funds, and how the business model kind of relates to all of this?
Yeah, that's a really broad issue, and I would be happy to shed some color on how it was the transition to us to experience this rapid acceleration in our growth. So I think that the first thing that comes to mind is that when you figure out that you want to enter the VC route and you want to go through that path, you have to be dreaming big, and I mean like really big. It's not sufficient to be the best in your neighborhood, in your city. We're really talking about dominating big markets and being number one in these big revenue pools, and we're really talking about dozens of billions of reais in annual revenue. That's something. And what we saw from when we started CloudWalk, and eventually now we are over 100,000 merchants spread across the country. We are transacting and processing millions of transactions. But that's just not how we started. We've began as a software provider to other acquirers, and then we realized, okay, this is just not big enough compared to our ambition, compared to our dream, and compared to the problem that we see that Brazilian merchants face. And we see that we have the potential of addressing this problem and bringing real solutions to these people and changing the lives of many families in our country. So I think that when we made the first pivot in our business, and then we started offering acquiring solutions as a plug and play, we give a step on that direction. But we still thought, okay, that's not the kind of business that we want to pursue in the long term. And then we moved upwards in the stream again, and now we are reaching the consumer directly through our brand, Infinity Pay. And naturally, that's an endeavor that really consumes capital. Making an acquiring business, although there has been a lot of regulatory improvements and the barrier entries, they are now more compatible and adequate in our perception. It's a capital-intensive endeavor to dominate the market. And we also saw that when you're dealing with international venture capitals, they have everything inside a box, and you must kind of fit what's in that box. So, for instance, we have to keep in mind when you're going through that path, is that this process can take a long time. You can start the process in November and go all the way through May to finish the round. And in the meantime, you're gonna have to provide updates on the KPIs. You want to follow with the same definitions. You want to keep track of your data room, who has access to what's the timeline, where each investor is at. So it's pretty sophisticated. And as things grow in size, it does get more challenging. So I think that's the key challenge that we experience navigating through one of the largest Series B in Latin America, and a successful one. And that's the key challenge. I think we have plenty of creativity as Brazilians. We are nice pitching, we are nice developing solutions, but when you have to keep track of multiple stakeholders in the business and also externally, it's a key challenge for me.
Super rich for insights. Thanks, Lucas. And I would like to direct Andre and Rojun. Andre, I know transition from HappyCare to Zaga, if you can tell a little bit on that as well, and how much you guys are complementing the services. And then Rojun, after Andre, please, if you can finalize the panel with the same transition from TruckPad to TruckPad Pay, and also combining other services in your platform, if you can just talk a little bit on those experiences.
Sure. So we started off to try and transform the way healthcare was provided in Brazil, I said, which was HappyCare back in the day. But we quickly learned, especially because we had all these constant feedbacks from our VCs, that the path we were trying to break through just wasn't the one of least resistance. Actually, it was a very, very hard path for us to trail. So the vision never changed, but we quickly realized that the way we were trying to get to it just wasn't going to work. So very similar to what Lucas said, we decided, well, hang on, maybe we can just adapt what we're doing and sort of pivot, but not fully lose scope of what we're doing. And in that case, it became obvious to us that the scope of the solution, so the integrated payments, the integrated logistics, the full-scale marketplace, which we wanted to build, was still viable, but it had to go through a few stages of evolution before we got to that point. And in that case, it made no longer sense for us to keep up the same brand, because that had a lot of, I wouldn't say negative brand equity, but of course, people were associating a business which was no longer what we were doing with what we're now trying to sell. And then this change in positioning, this change in branding, not only has it become much closer to our target audience, and of course has resulted in much better engagement, much better growth metrics than what we had seen before, but it also became much clearer for our customers what we were trying to sell, and that just triggered so much more retention than we had seen before. And of course, with more retention, we can then start building out the platform and layering in all the services which you alluded to, and of course, that is the end goal we're trying to achieve in that regard. So then again, it all goes back to the fact that the ecosystem itself was proving very valuable because of the constant feedback loop and the constant touch points and the interactions between the players just led this way of just the evolution and the betterment of the business to better serve our clients and to become closer to our clients.
Thanks for the great question. I think similarly to sort of what Andre talked about, in the beginning, we had a certain business model where we were focused purely on being a marketplace for transportation companies and for truckers. And we were able to grow. We grew rapidly, growing to have over 3 billion Brazilian reais worth of freight value running on our platform on a monthly basis. And we were seeing success. But what we realized, and this is where it's also very important for you to have maybe some local players, from the sort of advice that we had from our international VCs and our international investors, that was sort of the path that we were recommended to take. And what we were seeing is that the Brazilian landscape is very unique compared to others. What's really critical is, in order for you to really have that sort of high retention and to be able to develop an ecosystem, certain aspects such as a means of payment, which is sort of our transition into TruckPad Pay, were necessary because there was such poor infrastructure in Brazil as compared to other countries like China or the US. This is where it's really important for you to understand these sort of national differences. And so our transition into building out our sort of payments and fintech platform is that this will help us enable ecosystem where you go beyond just a marketplace and you're really providing a full suite of services from risk management to a control tower to payments. And then that really enables you to enter a whole array of services in the financial services realm, from credit to insurance, which are critical, I think, in all sectors of Brazil, but especially in logistics. And what we've seen is that once you provide this sort of more ecosystem approach in providing all these different services for these users, they then automatically have this desire to continually return. They become embedded within your system, and you're really able to understand and continually improve upon your services to help provide these new services to them. And that's actually one of the reasons why we're actually closing a round recently with a Brazilian VC, because they really understand this sort of local perspective, the local ins and out of providing credit, the difficulties of getting the right amount of data, the right types of data. And that's sort of where we're heading towards together with this new VC that we're hoping to close with in the next couple of days.
That's lovely. Guys, I think these are some very, very valuable insights here. We have the timing, and as you guys all know, this is we have an event here full of analysts, associates that are here to network and meet you guys. So we're gonna move to the second part of the event, which is the networking session. I'm just gonna quickly, I wanted to thank Rojun, André, Otávio, and Lucas once again here for the Brazilian Startups panel. We're gonna go to the Remo now. The session is gonna end. You're gonna be at this floor right here. You have kind of an elevator on the left side. The startups are distributed from floor 2, 3 to 4. And feel free to do the reach outs for all the startups. This is how you click and you go to all the startups that you can reach out. Plug and Play won't do any intermediation, so feel free to really reach out to anyone that any startup that you want to chat with. The idea here is a meet and greet. I don't think there's time for pitches and everything, but that's the whole idea of the event, the networking session. So we just wanted you to feel free to go to the startups tables and meet and greet whoever is of your interest. Thanks once again, guys, for the event. All our speakers here today, very valuable insights on all the VC landscape, the Latin landscape. Rafa, please.
Guys, so again, as Luigi mentioned, and thank you so much for your time. So I think we already talked a lot, me and Luigi, so we are going to jump for this network session. So enjoy this moment to connect with the startups with the startups, and the VCs with the VCs and the startups. So please enjoy the moment, and really happy to have this event and you guys with us.